Good morning, Miss Betty Faye. How are you?
Good, big boss lady. How are you today?
Girl, I'm blessed. I
I'm
woke up this
blessed. Me
morning.
too.
Look, you see my TikTok video? I
Exactly.
woke up this morning. I'm blessed.
Ex- Look, exactly.
Happy New Year, girl. We haven't talked in a while. I know you've been going through some things, and of course I'm always busy. So if I didn't reach out as much as I should, charge it to my head, not my heart, really. But
It's
anyway, everybody else, welcome to the first impromptu video of Brunching with the Boss Lady. So just to give you all an idea what we have going on this morning, first Betty and I and a few more people that I network with, we usually get together at the end of the year and do a little collaboration with each one-on-one, just to do like what I call a playbook of 2023 and well, the following year. So she was like, well, what day are we going to meet? We're always so busy, always. So I'm like, well, she was like, well, we're going to do it online or we're going to meet somewhere, have brunch or something. I was like, yeah, we'll do a brunch online or whatever. So I hopped up this morning. I started getting my food and stuff together. And, a brunch with the boss lady. That sounds good. So, of course, I text and say, girl, you got your lashes on?
no lashes today. We are all glasses.
Yeah. Well, I got my glasses on too, so no lashes. So, but anyway, so I feel like I may go ahead and turn this into like a little series or whatever, whenever I get a chance to hop online or whatever with some of the people that I network with. Most of them are business people. And just to give you a little backstory about Betty, she does a lot of stuff, just like me. And I've talked about her before. You see her sharing my stuff on Facebook. We share each other's Facebook. And she is the one that does my merchandise for my business. So does my t-shirts. When I started my boss business, she hit me up and showed me a sample or a mock of some t-shirts and stuff. And I'm like, hey, okay, you might have something there. But anyway, so she does all types of stuff. She is a realtor by profession. She's been in the accounting department with me at Conoco Phillips doing things. So she's an all-around lady, an all-around individual. But so Betty, this morning we are trying to get together our playbook for 2023. And I understand that you may have some questions about some things.
I do. I have a lot of questions. First, I think we should all cheers with our cocktails. If you have one, please join in with us. Like, let's get our mimosas going. Mine is definitely a little bit darker than hers, but hey, to each his own,
That
right?
sounds like you have a little more alcohol in yours then.
Good morning.
Cheers to the new year. And yes,
Absolutely.
and yeah, that's right, because my food. So we do have food. I'm on my I started eating, y'all.
We're gonna share our food. Like, oh my God. I think mine is probably way healthier than Bridget's. So I have egg whites and spinach and berries.
Oh yeah, because you keep the berries. I don't know if y'all can see this, but I did a thumbnail, so I'll show it on my anyway. That's eggs, waffles. I have some sausage patty back here. And these are pecan smoked chicken drumettes. They're not fried, they're air fried. Even though she did say that hers is healthier, and it is, you know me, keto. I try to stick to the keto / low carb. When I did keto strict, I lost about 40 pounds. I went from 265 to like 225. And it's been so hard for me to get this other 30 pounds off me, girl. I've basically been in maintenance. So it just keeps fluctuating. So I done tried all kind of other little fad diets and stuff. But this is still low carb because what I have here is eggs, and I have a sprinkle of cheddar cheese on it. I have the breakfast sausage patty, and the waffle is actually egg based. But what I do is I put probably like a couple of teaspoons full of pancake mix in it, just to make that dough dough consistency. So it is under 25 carbs on this plate.
And y'all, she's trying to show me out. Okay.
Those pecan smoked chicken wings are not fried. They're already prepared, so they may be fried. But anyway, so I put them in the air fryer, but they're still low carb because it's meat. So awesome. The only thing that's really full of carbs is this drink here because it has orange juice in it. The tequila is okay, but it has orange juice in it, which of course is sweet. And then what I have is a tequila sunrise. If anybody's interested in it, it's basically tequila, orange juice, and a dash or droplets of grenadine. I guess that's how you pronounce it. Grenadine. Grenadine is red. And that's what
Fancy.
settles at the bottom to make a little orange color. And you know me, I put a little splash of triple sec in it, so that's more sugar. So basically, this is probably the highest carb thing I have over here. All that sugar. Anyway.
Okay, we'll give it to you then. We'll give it to you, sis. You kind of beat me then because my drink is probably way more hefty than yours. Because it's
Okay.
champagne, orange juice, and Hennessy. So,
God. Say brunch then. You do this dinner for you to bring it like that this early in the morning.
hey, it's the new mimosa.
Okay.
But hey, lady, thank you so much for always taking the time out to be there. As Bridget mentioned, we go back a long time, and we've kind of been in each other's corner from day one. And I greatly appreciate her for always being there for whatever question I have, whether it's just something simple or if it's complex. She's like, let me get back to you on that. But she's definitely, so if you're not using PBS Solutions, you need to get it together this year in 2023. Think about that. She's also she's a jack of all trades, a notary, accounting. So she has everything that you possibly can need. Trucking business. What else? The list goes on and on. But we're going to get into the purpose of this call. So as we just ended 2022, we all know it's time to get ready to start preparing your 2022 taxes, whether it's personal, business, whatever you have. So some questions that I have for this year that I'm starting to try and prepare, I want to get better organized because I'm one of those people that has my paperwork everywhere. So going into 2023, as I'm starting with her, I'm like, okay, how can I make your life easier for the next season, tax season, that we're not scrambling trying to figure out all this paperwork? So one of the things is, what are some things, even as a realtor or a general business, is some things that we can start looking at how to write off things, things that we should be trying to write off. And then also, like, is there any programs or systems that we can use throughout the year to help us better prepare for our tax seasons?
Okay, the first thing I will address is the systems. That's the most important thing in organization. And actually, that is my vision and mission statement. So it's to help people get on board with their business streamlined with innovations that help us succeed in our business. So the first thing that I always do with my clients is offer them QuickBooks. I know there's, excuse me, other softwares out there, other apps, other accounting softwares. I live by QuickBooks like a Bible. I've been using QuickBooks since I had my first business back in 2015 when I had a daycare. Excuse me. Actually, it was the desktop version. Now there is an online version for self-employed people, with their sole proprietors, for people who have vast businesses like you and I, or several businesses. QuickBooks to me is the way to go. I am a QuickBooks ambassador. I will not stand by anything that I know that does not work. So, and I have, like I said, all my businesses in QuickBooks. So QuickBooks or any type of accounting software. So if you don't want QuickBooks, that's fine. But some type of software or accounting / bookkeeping program is where you need to begin. It's very simple. Now I'm going to speak on QuickBooks. Like I said, I've never used any of the other platforms, so I cannot speak on that. But I'm going to tell you how QuickBooks works. Number one, when you sign up for QuickBooks, you have a business bank account. You should, if you have a business. If you've gone on, if you just started, fine. But once you get into the business, you definitely need a separate bank account, which is your business bank account. So you tie that business bank account to QuickBooks. QuickBooks interacts with your bank at night. It syncs everything, every transaction that you put in that bank account syncs to QuickBooks on a nightly basis. Sometimes you may have a hiccup, you have to go back in, refresh or whatever. But it syncs with QuickBooks. So all of your business data is there. All those receipts that you get, and when you purchase something for your business, you definitely have to keep those receipts for auditing purposes. In case the IRS needs to audit you, or you show proof of something, or for any reason, you still need to keep those receipts to up to at least 7 years, supposed to. That's, as accountants, that's our rule of thumb. But anyway, so that's where you should start. You should start with getting you some type of bookkeeping or accounting software. I know old school people or people who are just starting off that are on a budget. use spreadsheets. Spreadsheets are fine, but again, it's still just much easier. I mean, the subscription that I pay for is only $29 a month, so it's like $31 with tax, about 30 something bucks with tax. So
Well,
it's a
let
good.
me ask you something, Bridget, in that little part. So what if you have multiple business? Should you have multiple QuickBooks subscriptions, or does QuickBooks allows for you to have be able to use all your businesses within one suite? And then I'm
Well,
sure at the same time you need to have separate bank accounts for all those individual businesses.
you can have one subscription, and you can have, so what happened is you have what they call a chart of accounts. So you can have one subscription. Let's say if you have just two businesses and you want to put them all under the same subscription, you can. It's not too complicated. But if you have several, let's say like for me, I'm gonna give you an example. I have 5 different businesses. All 5 of them are different industries. The only one that I really have a separate subscription for is my trucking company. And that's because I actually make payments out of that subscription as well, or out of that business account. The other accounts I don't pay anybody out of except my professional business solutions account, because I have other ladies that work or affiliated with my company. So I have a separate subscription for the trucking company because it's industry specific. Everything that I do with that trucking company comes out of that business bank account, including paying those truckers. So, but the other businesses I have one subscription for, and that's the one under PBS. So you have a chart of accounts. So in those chart of accounts, I'll have a main account that's for PBS, and then those sub accounts under there for everything for PBS. Then I have another main account for let's say the cleaning company, and then I have sub accounts under that for the cleaning company. Because what happens at the end of the day, at the end of the year, when you run your reports, all of it is going to come out on a report in different categories, and it's still all going to go on your business / personal income tax return. So you'll have it all there in one report. The only hassle of it is if you do have more than one subscription, then yes, you have to pull reports out of each one of those subscriptions, then tally it all up together to put it on your tax return.
So do you file 1099s for clients too?
Yes, ma'am, I definitely do. For people who pay, I made a post on Facebook the other day, for people who pay someone, a contractor, subcontractor, or anyone that you pay consistently, anything over $600 or more, then you're supposed to give people a 1099. Not only for their records to file for their taxes, but it's a tax deduction to you. I mean, you can still file it, but the thing is, I've had a couple of clients who paid people $15,000 during that year. And the first thing I asked them, well, did you give them a 1099? No. First, some of them say, well, I don't know how to do that, or I didn't know I had to do that. But you should give them a 1099. Again, you can still take that deduction, but let's say the IRS say, hey, when you pay somebody $20,000 in income, we need to see the documentation. So when you pay somebody that amount of money, or like I said, anything $600 or more, you're supposed to give that contractor or subcontractor a 1099. You are also supposed to report that to the IRS on what they call a 1096. That's how so that way, that subcontractor, when he or her filed their taxes, and it's just like a W-2, they put that information off the 1099 on their tax return, and the IRS gets it and they pull it up and say, oh, okay, yeah, we do show that ABC company did pay him $15,000 for the year. You got that info there. No audit on you, no audit on him.
But so when do you supposed to have your 1099s to your contractors?
Supposedly by the end of January, by January 31st.
Okay. And that means mailed out or post dated?
Post dated.
Post dated on the stamp, or like, do they have to have them by the 31st?
Post dated, but I mean, if you want to be on top of your game, get it to them by the 31st, because people are waiting on that information. All their taxes. I mean, this year the IRS will start accepting tax returns on the 23rd. So why would you want people to wait, any longer? Because depending on what type of accounting period you have, December 31st is the cutoff for cash accounting. Pool accounting is December 30th, or whatever your accounting period is. But let's say most people is December 31st. So at December 31st, anything you do after that, if you're on a cash accounting basis, you're done. then you may as well just give that information over to the person that's doing your 1099s and let them get it over. If you're on a accrual accounting period, then you've done things in December, but you won't get the information till January. So then those people, kind of lag behind with getting the documentation. But that's a kind of go over people's head with accrual, cash count, that type of stuff, because those are industry specific terms. But rule of thumb is you need to have it to them by the 31st of January.
Thank you, Bridget. That's some great information. So let's just kind of move over to write-offs. Like, hey, we are all trying to figure out ways to save, to get some money back. So as we continue to go throughout our year and we're looking for different things to write off, even as a realtor, like what are some of the top things as a realtor that I can write off?
There are most write-offs are pretty standard across the board because it's regulated by the IRS. But when you get industry specific things, let's say for instance, like a realtor, like you said, you do things that accountants may not do, or you do things that again truck drivers don't do. So there's some things that you may have or expenses that you may have paid out of pocket for that you can file on your taxes. One example is
what about the gifts that we give to our clients? Like if we give gift cards to our clients and stuff like that, is that write off? Can we write stuff off like a closing gifts? Like most of the time we always give our clients closing gifts. So is that something that we can write off?
Perfect example. Exactly. Yes, you definitely can. It depends on how you categorize it, but you definitely can. Me with stuff like that, I put that under sometimes there is a thing called gifts on the IRS code, but with mine I call it employees something on my stuff. But of course they're not your employees, but there is a section that you can write it off sometimes under meals and entertainment type of stuff. That's what I put it under for some people. But in the IRS code there is a thing on there that you can write off for gifts. So you can definitely.
Is there a limit? Do you think there's a limit?
No. No. And if you have a whole lot, you may want to split that up into some type of other category. Okay. But if you write off $100,000 worth of gifts to clients, then you asking for it.
Gotcha.
So, but yeah, something pretty average is not limited or should not throw a red flag to the IRS.
One of the big things I'm questioning is about meals. Like whenever you take clients out to meals or you take different people out to meals, like how do we actually categorize that? Can you write alcohol off on that, or is it just strictly meals? Like how does the IRS look at that?
As long as whatever's included in that meal is, if you are entertaining a client or a prospective client, it can be written off, including that meal. If you're just going out saying, hey, I'm fixing to go out and have drinks with my friends tonight, and I'm gonna write it off on my taxes, a bunch of alcohol, no, you're not supposed to.
Okay. Even if it's picking up donuts or coffee and taking to whatever location, like that's still considered part of the meals and entertainment, right?
Absolutely.
Okay, cool.
Absolutely.
So baby, y'all better start making sure you keep the receipt.
You're supposed to be with a client or prospective client. Now, one interesting thing though, those meals are only deductible up to 50%. And if you're a truck driver, they call it DOT meals or something like that. There's another percentage for those meals they can deduct. This past year, for tax year 2021, which was filed in 2022, with the Biden administration signing in the CARES Act, he allows business owners to deduct 100% of the meal, but that is no longer in play anymore. Everything that they signed under that CARES Act is out the window.
One other write-off I know a lot of people have a question about, this is not just related to real estate, it's general, is tithes and offering, tithes for churches. Like how do you... So that's like a big question. I know there's a cap on that, and some people get kind of confused with that, and they figure they can write off the entire thing, or if they don't, if it's it has to be a certain dollar threshold. So what is that threshold?
There's no dollar threshold.
Okay.
The threshold that, like I put on Facebook the other day. So what happens is, now let me break this down, because I know a lot of people, that is a big, like I said, big topic. And every year I see people arguing about it. There is no threshold. It goes under charitable contributions. Again, for the last couple of years, through the Biden administration and COVID and all this, they were allowing people to take up to $300. That's the threshold that you're probably talking about. Up to $300 on the front end of their tax return. Even if you didn't do itemized deductions. Because what happens is when you do tithes and offerings, that goes on what they call a Schedule A. A Schedule A is for itemized deductions. You only use itemized deductions when those deductions are more than your standard deduction. So if you don't use itemized deductions, you're not even using that tithes offering statement. So you're waiting on that statement. You give it to your tax preparer. They put it in your tax software and you're being charged for it. Because every document that goes in my software, it's a fee on it. So to break it down just a little bit further, we're not getting into too much detail. And if anybody wants to have any more, collaboration or have any more detail on it, you can definitely schedule a free consultation, first time free consultation with you. So on that Schedule A, the IRS gives us a standard deduction to knock off the front end of our income. You make let's say $75,000, and you are head of household. IRS says, and you have children. IRS says, okay, well, we're gonna knock $19,400 off your income. So that's the standard deduction. Now, your itemized deductions have to be more than $19,400 in order to use itemized deductions. And that's where the charitable contributions and the tithing goes on itemized deductions. So if those do not add up to that $19,000 for head of household, it's $12,000, I think it is for single, $12,950 for singles. If it does not even add up to that amount, you're not even doing itemized deductions. You're not even using that tithing statement. You get it in mind, guys. You can get it and put it on there if you want to, but you're paying somebody to put that on your tax return. You're not even using it, because I guarantee you, their software, unless they're using TurboTax, their software calculates every form that you put in that software. So yeah, the tithing, there's no cap on it. The only cap is it needs to be more than what your standard deduction is. So let's say you had tithing, you had mortgage interest, because that's another one people ask about. Those things go on Schedule A's, and if that stuff does not total up more than your standard deduction, you're not using it. And a lot of people, they get a little pissy, they get mad when I tell them that they can't use their mortgage interest. Well, why not? They said that I can use my mortgage interest. Yeah, but if it does not add up to more than your standard deduction, you're not using it. So the charitable contribution / tithing, the mortgage interest, real estate taxes. Let's say, okay, now, a perfect example, a couple of years ago, there were hurricanes that hit back to back in Lake Charles. And, when you have a casualty, theft, or loss, that goes on the Schedule A as well. Well, you're allowed to take all of that. That loss adds to your standard deduction, give you more, and you throw the tithe and offering statements on there. But that gets a little more detailed. But to answer your question, the only cap is that stuff needs to be more than what your standard deduction is in order to even utilize it.
Got it. So one last thing, or one thing I want to ask is that for any new business owner, what advice would you give a new business owner? Budget. First hire PBS solution. That's the first thing. Okay, now next.
First thing, consult with PBS Solutions. You are definitely right. Definitely. That goes into a whole different conversation, because the first thing I see, which made me start this business because of the need, I would see people get on Facebook or social media and say, hey, I'm a new business owner. I just got my EIN. So I continue to watch the page. Oh, I got a logo. Continue to watch the page. Got a website. I continue to watch that page. Here's my business card. And at that point, I go in and say, hey, did you register your business? No, how do you do that? Make it official, people. Get you a DBA or an LLC. Then they go in, you see people in the comments, you don't have to pay him no money, then you can do it yourself. Okay. I'm here if you need me. All you gotta do is go to the Secretary of State website. Then they go into the Secretary of State website, they start their LLC. Then a year later, they get a big penalty in the mail for about $1,500. And then they hit me up. Hey, what is this? I didn't know I had to pay taxes. And what it is, it's a letter from the state of Texas comptroller saying that, hey, you failed to file your franchise tax return. You owe us $1,500 in penalties and fees. So what I said that to say, there are other things that come along with starting a business. You can't just go out there and file an LLC and get you an EIN and start selling stuff or providing services, and you don't know what else come with it. Franchise tax returns, quarterly sales tax returns. That's another thing. They're supposed to be charging taxes on that stuff, and all that tax money is supposed to go to the state of Texas. So if you filed a business and you said you made sales and you did not give the people the sales tax money, state of Texas is going to send you another big fat whopper penalty in it. So there are other things that come with just filing, just DIY in your LLC. Now, I'm not bashing anybody, but there's things that come with it. Again, I do free consultation on the first time. After that, my subsequent consultation is $55 an hour. After that, if you want to consult with me on some other things, it's like $125. But you have to remember, you got to spend money to make money. And I feel like my costs are pretty reasonable for the information that I do provide to my clients. And they always tell me, hey, Miss B, I'm so glad that I, linked up with you or whatever. But yeah, so the first thing I would say is, again, consult with someone. Make your business official, file that LLC or that DBA. And yes, there is a big difference between having an LLC and a DBA and LLP and all that stuff. That's a whole nother conversation for another day as well. And if you again want consultation, hit me up, PBS. So that's the first thing I'll tell them. File your business and make it official. Consult with someone, file your business and make it official. And then you follow up with them to find out what the tax implications are. How does this affect my tax return at the end of the year? How am I supposed to file this? Because there are people out there that want to file as a joint venture or a partnership, and they don't know that does not go on a regular 1040 form. And partnership returns are due on March 15th, not April 15th. So it's a lot of stuff that people don't know, and they get out there and they jump in the water without a paddle sometimes, and they either scared to consult with people, or they figure, oh, I'm not going to pay anybody. Or a lot of people go to Google. A lot of people like what I'm doing, putting it on YouTube. That's fine, but you also have to research to make sure that the person that you're getting this information from is credible, and not just regurgitating stuff that they have heard me or somebody else talk about. Also research to see, what the stuff that they're learning or finding out on YouTube and Instagram, to see if it's even real. See if they know what they're talking about. Like the questions you were asking about the cap on tithe and offering, and can I really deduct my meals? Yeah, you can deduct them up to 50% as long as it is business oriented and you're with a prospective client. So that's what I'll tell them. Consult with somebody and start that business as an LLC or DBA and make it official. And then do another consultation to find out, okay, what do I do from here? What else is it that I need to do? How is this going to affect my taxes at the end of the year? How should I file these taxes? When should I file these taxes? That's what I would tell them.
Oh, you just made another point I just thought about. So something I know that has changed over the years is mileage. How can you claim mileage? So as you all know, as realtors, we do a lot of driving. We use a lot of gas. And so how has that really changed, and what can we really do to try to claim our mileage?
Okay, mileage. And then also I'm going to look back also, because I didn't finish answering the question about deductions, the other deductions. Mileage. I made a post the other day. I was back to back. You can take
follow her on Facebook, guys, if you do not, or on some social media platform.
You can do mileage, but you can do mileage and you can do what they call actual vehicle expenses. You can only do one or the other. You cannot do both. The IRS does not allow you to do both. It is good to keep up with the mileage because what happens is 99.9% of the time, my clients, or I do actual vehicle expenses for my clients. I'm 100% of the time because with the clients that I do, most of them, their vehicle expenses are more. They don't travel a lot unless it's a truck driver. But then again, even with a truck driver, their vehicle expenses is far more than the, I ain't gonna say far more than the gas, but much more than the gas. Think about it, the tires that they have to purchase for those big 18-wheelers. Any maintenance that they do is very expensive on an 18-wheeler. So most of the time, my clients, I let them deduct the vehicle expenses. But you still need to keep up with the mileage because even when you do the vehicle expenses, you have to put in how many miles. So first of all, you determine, are you using this for 100% business? Or what percentage of business are you using this vehicle for? So it'll tell you to put in how many miles you drove that vehicle for the year. It'll ask you how many miles did you use for just commuting, like you just going to your regular job or something, to the grocery or whatever. And how many miles did you use for business? So they take that percentage. Let's say you used it for 50% business, 50% personal. So you may have had $20,000 worth of vehicle expenses, then you can only take 50% of those vehicle expenses, which is still sometimes more than the mileage. So the mileage, you still need to keep up with the mileage to determine the percentage of use for that vehicle. Now, if it's 100% use for that vehicle, still keep up with the miles because it has to use that figure to determine that 100%. But the mileage is great to keep up with. But 9 times out of 10, you'll use the vehicle expenses more, even with realtors, y'all going back and forth or whatever. Now, I'm gonna use an example like when COVID hit. You were a realtor, everything was closed down. So your mileage was not all that great that year. So again, your vehicle expenses will outweigh that mileage. Now, let's say everything opened back up and yeah, you're every day, you're back and forth somewhere, going somewhere, showing houses or whatever. And you may not have had that many expenses. You got a brand new 2022 vehicle that didn't need to go in the shop and have brand new tires on it. You may have taken and got an oil change, your oil change. Your oil change is probably only totaled about $200 for the year. But then your mileage is how many thousands of miles times the 50 whatever it is percent or 50 something cents per mile. That may have been more than those oil changes that you did. So definitely, yes, take your mileage, but you can't take both. You can only take one of the other.
Good information. Okay. Let's see, do I have anything else on my notes?
But now going back to the other expenses, so I know I left y'all open, hanging on there. Other expenses, and as you can see, I just did mention your vehicle, so you can take those vehicle expenses. Advertising, if you paid someone to work for you, if you are renting or leasing a space somewhere for people who do hair or barbershops, you can put that rent down that you pay somebody to where you're renting the space. All of your supplies, of course, if you're doing anything, again, we're going to go back to barbers and stylists. Office supplies, purchasing paper for a printer, all that type of stuff. Basically, really, just about anything that you use for your business is pretty much deductible, unless it's just some off the wall, something that you purchase personally, you can't deduct it for a business, or some big elaborate expensive something other than but pretty much everything that you use for your business is pretty much deductible. There may be some maybe some caps on it or whatever. A perfect example of that is home office use. Now, that is one of the last deductions on that Schedule C, which is where your income and expenses go. That's one of the last deductions on that page, which is home office. There's 2 ways you can do that. Either you take the whole square footage of your home, and then you measure the space that you use for your home office or the bedroom or room or wherever your office. You take that measurement, the square footage of that, and you divide it and come up with the percentage that you use for your home office. So let's say you use 25% of your house for home office. Then you take all your utility, like your utility bills, your lights, gas, water, your insurance, your rent, if it's your house note or whatever, then you could take 25% of that for home office expenses. So you can do it that way, or you can take the IRS now gives us a standard method where they say, okay, well, we just gonna automatically let y'all take 300 square feet as home office use and multiply it by 5. So that's a $1,500 deduction. And usually that's what I do for my clients. I just take the standard method, because sometimes it may be more than what it is taking the whole measurement of your house and the square footage. So I just use the standard method. That's a $1,500 deduction. So anyway, so you can do that. Your cell phone use, your internet use, so stuff like that that you use at your house, your Wi-Fi. If you have an extra cell phone that you use for business, use that, deduct that. So you can deduct pretty much everything. Now, one more thing before we get off that topic. And I've had a couple of people already on my comments. What is that? I know my tax preparer didn't tell me nothing about that. It's depreciation.
Everything depreciates.
I say I know, because they probably don't know and they don't know how to figure it out or calculate it. So you can take depreciation on that vehicle that you're using for business. Again, if it's used for 50% or more, or 50% or less, or let's say 50-50, you only get that percentage of that depreciation. But if it's 100% used for business, you can depreciate it 100%. Now, depreciation. What is depreciation? Depreciation is, okay, let me break it down. Social media gurus are out there telling people, oh, go buy you a 2022 Escalade, you can write the whole thing off on your taxes. That is part true. If you go get the Escalade, whether it's in your business name or your personal name, and you use it for 100% business, you can deduct the whole thing off in the first year of use. Now, the catch-22 to that is the first year of business, or the first couple of years of business, you may be taking losses. You might not need to write that whole truck off. You're just wasting your deductions. So now let's say you've already budgeted and you're looking at making $200,000-$300,000 next year. That $100,000 Escalade can be depreciated or like deducted over the course of 5 years. So you take that $100,000 vehicle, you divide that by 5, you can take a $20,000 deduction every year for 5 years. You may not need it that year. So why would you write the whole truck off in the first year? So it's all about, again, budgeting and talking to someone and doing tax planning and knowing the codes and stuff of the IRS and doing tax returns. So yes, you can write that whole vehicle off, but would it behoove me to write that whole vehicle off the first year? You wasted deductions. I may not need that. But anyway, so that's what depreciation is. It's not so much as a write-off. Some people have even asked me, can I get that money back? It's not that you'll get the money back. The thing is you can deduct it. You can deduct your truck note. That's not how you write it off. It's not how you depreciate. You cannot, absolutely cannot deduct your vehicle note. The only thing that you can deduct is the interest on that vehicle note, because the IRS allows you to depreciate it. So if you depreciate it and write off the note, it's double dipping. So if your tax preparer knows and they do that, then you and that person can get in trouble. But code is you can only write off the interest part of that vehicle, that business vehicle loan. The other part, you cannot take a deduction for that. That actually is supposed, that's why you need accounting software, because that part of that note is actually supposed to go as a liability to you. So you can depreciate that vehicle and you can take depreciation on there. You cannot depreciate the note. You can only depreciate the interest. And you can depreciate it over a course of 5 years. Other equipment, machinery equipment, sometimes you can depreciate over 7 years. You can depreciate desk. Anything that's another tip. Anything that you pay $200 or more for is considered an asset by the IRS, and you can depreciate. That's only like one item. You can't go buy a set of tools. Well, if it comes in one big set, like like mechanics have those big old tool boxes. They roll around. Now, if you just buy one big old something together for $200 or more, then yes. But if you go buy two for $50 or two for $75 too, and then it add up to 200, no. It has to be one single item or one single something that adds up to $200 or more, and you consider that as an asset, and you could take depreciation on that. Or something like that, you could just write the whole thing off. But like $100,000 vehicle, you go out there and buy for business, it sometimes it's not even worth you writing the whole thing off.
Well, we really hope this information has been helpful. Let us know what else you want to hear about, like what information that you want to know about, that you need to operate your business or your personal taxes. It don't have to be a business taxes, because we all file personal taxes as well. So definitely reach out to PBS Solutions. Hey, because she is the boss lady for a reason. So she will get you right one way or another. So just stay
Boss
focused.
lady.
But hey, Bridget, your closing remarks, and let's let these people go.
Okay. Well, anyway, thank you all for joining us with our first session of Brunching with the Boss Lady. I'm pretty sure me and Betty gonna be on here quite often, because we always have something to talk about. As it go on in the year, we come across things and come across people, and we share our experiences with each other, whether it's good or bad, or we laugh at it. And sometimes it's also a learning experience for us as well. But I hope I was able to give you all some more jewels, some tips. I did a video the other day about these credits for taxes as well, which you mentioned personal taxes. So it's not that we just do business stuff, but on a personal level, the reason we went the business route is because it rolls into your personal tax return. You don't do two separate tax returns. So, but on a personal level, well, I talked about credits and how the credits dropped down this year compared to what it was last year and the year before. So go back and watch the video on that. I really apologize. I do not know what was going on with the internet. Once I went and did a little edit and uploaded, it started freezing up in little spots. But hopefully you were able to, you're able to get something out of it. So anyway, so we're gonna go ahead and close this session out. And then Betty and I are going to talk about some little personal things and talk about how our year was and what we plan on doing for 2023. Because, baby, this year fits to be personal for the boss lady.
Get you an accountability partner. She's mine, yes. So I'll get you one.
Yes. Even though I need somebody to be accountable for me, sometimes I be like, oh, Lord.
So just think, as the owner of a business, she's doing everybody else's tax return, but I best believe our stuff is always at the end, at the tail end of everything. So it's not just that we're putting ourselves first, it's we're thinking about the customer, the client. You're always our number one priority, and she is definitely going to put you first for everything.
Thank you, thank you.
So
thank you for all
we're going to cheers and close out.
Yes. Oh, look at your glass.
Baby, you better catch up.
Cheers for a wonderful, awesome, prosperous new year. Not only for you, Miss Betty, but for everybody out there in cyberspace. And I hope we all elevate this year. I mean, we all were blessed to get over COVID. And we made it so far. So happy new year.
Absolutely. Let's get it.
Y'all later.
Bye.